What's going on, everyone? It is May 18th. It's been a long time since I've done a rate update, and it's because things have been so calm. It's been fantastic. We went from the most volatile times we've ever seen to calm, crystal clear waters. So I'm going to show you what's going on. But one thing we have to keep in mind is there's still a lot of things changing. So what we're going to talk about in this video is what mortgage-backed securities are doing for the national loan limit. So that's one key piece, right? Because that is ultimately what the Federal Reserve is investing in right now. And that is $510,400 or less. That is conventional conforming national loan limit. From $510,401 up to $765,600 in certain counties, not every county. That is kind of the next tier up, and they're not buying those. So we've seen a little bit more volatility in that price range, basically. And above 765, 600 is what we call jumbo. And jumbo, all bets are off as far as the data that we're looking at has no application whatsoever to jumbo loans right now, simply because there's none being sold and securitized to create a mortgage-backed security. So we're seeing higher rates on jumbo loans than we have. But from where we were, where rates were going all over the place, whether it's jumbo, conventional, or that middle tier we call high conforming, high balance, jumbo conforming, those are all the same thing. It's calm. It's so much better. So let's jump into the data. We'll take a peek at what's going on, and then we'll go from there. All right, everyone. So here we are. Mortgage-backed securities, as always. Now, this is what I'm talking about, right? This is when I did my last video. This was right when coronavirus started. Here is shelter in place day one right in here. The most volatility we've ever seen in history in a 2-week period. And then the Federal Reserve stepped in and said they were going to buy mortgage-backed securities to calm things down. So we got a little bit better. And what happened was, again, up here is good. That means better rates. Well, you would think that when we're up here, rates would be better than where they were prior. They weren't. The Federal Reserve doesn't need to lower rates even further. All they have to do is keep them at these levels. Now, these are historic lows. So do we need a 30-year fix to be 2.5% to stimulate home buying? No, we don't. And right now, with shelter in place, everything else going on in the Bay Area markets, we're still seeing multiple offers on a lot of different properties all over the place. So having a 30-year fixed in the mid to low threes seems to be a sweet spot. So what the Federal Reserve has been doing is just keeping it there. Now we'll go back in and look at the flat line that we've had, the calm, cool waters we've had for like the last, almost 6 weeks, 2 months at this point. I'll show you. So look at this. Look at how volatile we were, and then look how calm it has been. It's just been a lot more mellow. And if we look at right here, so what day was this? So April 14th through May 18th, so that's 1 month. Basically no change whatsoever. This day looks bad. It wasn't. There was a rollover this day, so it makes it look worse than what it was. But basically, rates have not really moved a whole lot. But let me show you what I think is interesting. If I turn on the 25-day moving average, look at how mortgage bonds were kind of following that. And then it touched here, and then it broke below it. So it went from acting as a floor, keeping rates down, right? This is inverse of what you would think. And then it became a ceiling, and it was forcing rates for the worse. Now watch this. If I click 50-day moving average, look what happened. We had the 25-day as a ceiling, the 50-day as a floor, and we kind of hovered right in the middle. Today we touched below it. So there's a chance we go for the worst tomorrow. Now, all that being said, looking at the data, and okay, yeah, that makes sense how these things are working. There's still a lot of conversations about what to do in the future. The Fed is basically saying we're going to put money on this until we don't have to anymore. And with them continually keeping shelter in place, stay at home in place, people are still losing jobs, unemployment's going up, and it's going to be a long recovery. So all of what we just saw, I don't think rates are going up anytime soon. There's a chance they'll go down even lower. I just logically can't find a reason why the Federal Reserve, the government's going to put more money into something more than they need to. They're going to do what they need to do. They're not going to do more than they need to do. But rest assured, whether you're refinancing or looking at purchasing a home, lowest rates we've ever seen in history, and they're staying low, which is so exciting, and it's relief compared to what we were doing before. So I hope this has been helpful. Comment below. Let me know what you think. Ask me any questions. let me know how I can help. I want to make sure I'm adding value here, so feel free to comment. And if you have friends, family that want to see these videos, share them with them as well. Thank you so much. I'll have another update for you next week. Cheers.